Hello everyone and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is November 20th, 2025, and we are taking a deep dive into one of the market's most talked about stocks, Tesla, ticker symbol Tesla. There is a massive tug-of-war happening between bullish and bearish narratives right now, so first we're going to unpack the latest news before we hit the charts. On the bullish side, the excitement around Tesla's AI and robotaxi ambitions continues to be a primary driver, with regulatory progress in Arizona and a pilot program in Austin fueling optimism. This narrative gets a boost from strong earnings in the semiconductor space, particularly from NVIDIA, which reinforces the potential of the entire AI sector. Conversely, the bearish case has been gaining significant traction. Headlines have been dominated by a dramatic three-year low in China sales for October, a critical market for Tesla, raising fears about intense competition and shrinking market share. Adding to the pressure, we've seen reports that Cathie Wood's ARK Invest, one of Tesla's most prominent supporters, has been trimming its position for 4 straight sessions. While ARK still maintains a massive holding and a very bullish long-term price target of $2,600, this short-term selling from a major bull is something traders are watching closely. Furthermore, concerns over Elon Musk's hefty compensation package, ongoing litigation, and other institutional selling have created significant headwinds for the stock price. So with that conflicting backdrop, let's turn to the charts to see how this story is being told in the price action. Here on the daily chart, we can see the sheer volatility of the past year and a half. The stock put in a major top back in December of 2024, right around the $480 level, before a series of sharp corrections. After finding a bottom in early 2025, it staged several recovery attempts. The most significant recent feature is the powerful rally from late August, which culminated in a peak just shy of our first major resistance level, near $475 on October 2nd. Since that early October high, the trend has been decisively downward. The price has sliced through several potential support areas, confirming a strong bearish momentum in the short to medium term. We can see this downtrend accelerated significantly in early November, which directly correlates with the timing of those negative headlines regarding China sales and the news of Cathie Wood sales. This serves as a classic example of negative news catalysts confirming and accelerating a technical breakdown. Now let's zoom in on the action from October 1st onward to get a clearer picture of the key levels we're dealing with today. As you can see, that peak on October 2nd was at $470.75, a level that bulls failed to hold, leading to a sharp reversal. The stock then fell aggressively throughout October before a brief, sharp rally near the end of the month. However, early November brought another wave of selling, with the stock tumbling from a high of $474 on November 3rd. The selling was relentless for about 2 weeks, culminating in a critical low of $382.78 on November 14th. This price zone between roughly $382 and $396 now forms our most immediate and critical support level. The stock bounced hard off this level, and for the past week, it has been trying to stabilize and find its footing. Currently, the price is consolidating in a range, seemingly caught between that newfound support and overhead resistance. The first minor resistance area to watch is around the $410 to $412 zone, where the price has struggled in recent sessions. A break above that could signal a stronger recovery, while a failure to hold the support below could usher in the next leg down. To see this recent battle more clearly, let's switch over to the 15-minute chart for the last few days. This short-term view shows the character of the current consolidation. On November 17th, we saw a powerful intraday rally, with the price moving from below $400 all the way up to nearly $424, showing that buyers are still present and willing to step in aggressively. However, the following day, on the 18th, much of that gain was given back in a sharp morning sell-off, with the stock testing support back down near $393 before recovering. This back-and-forth action highlights significant indecision in the market. Yesterday, November 19th, was largely a day of choppy, sideways consolidation, with the price trading in a range between roughly $398 and $411. The $400 mark is acting as a psychological pivot point. Traders are clearly fighting over this level, and a decisive break above or below it on high volume will likely dictate the next short-term move. The bounce is showing signs of weakness, without a clear push above the recent highs around $410 to $412. We need to see if bulls can muster the strength for another leg up, or if bears will take control and push the price back towards the key support levels we identified on the daily chart. Alright, let's bring it all together and recap what you should be watching. Your key overhead resistance levels are, in order, the local resistance around $412, the intraday high from the 17th around $424, and then the more significant zones at $440 and the major peak at $470. To the downside, your critical support zone is the recent low between $382 and $396. A break below this area would be a very bearish signal and could open the door to a test of the $350 to $360 area from late summer. So, what are the potential scenarios? A bullish scenario, which I would give about a 45% probability, would involve the stock decisively breaking and holding above the $412 resistance level. This would need to be driven by either a broad market rally or some positive, company-specific news, perhaps related to the Robotaxi rollout. If this happens, a move to test the $425 to $430 area becomes very likely. Conversely, a bearish scenario, which I see as slightly more probable at 55% given the recent downtrend and negative news flow, would see the price fail to break out and instead fall below the $396 support. This would likely signal that the recent bounce was merely a brief reprieve in a larger downtrend, and a retest of the $382 low would be almost certain. Things to watch for moving forward are any updates on China production and sales figures, further news on institutional holdings like ARKs, and any new developments on the regulatory front for autonomous driving. Also, keep an eye on the Senate hearing scheduled for January 14th, which could create volatility. Ultimately, the battle between the long-term AI growth story and the short-term EV competition and margin pressures will continue to define Tesla's price action. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own research and consult with a qualified professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.